this quarter we've finished all of our empowerment deals, which will mean that we have now satisfied our 2014 equity ownership obligations. And because of the accounting rules, we write off that entire cost in this particular quarter. And that's worked out at about 2.2 billion rand, about 3 rand a share. So you've got to look at it in this context. 3 rand a share has bought us all of our ownership requirements in 2014. If you strip that out and look at the core business, in fact, our earnings went up 45%. So we have shown the benefit of the higher gold price to the bottom line. Our costs have been very well controlled. In fact, our costs have been reduced this quarter, the second quarter in a row that we've had really good cost control. So I'm very pleased with where the margins are performing and how the operations are doing.
Yeah, let's talk about output. Output during the period unchanged versus the prior year. Were there any specific problems that related to this quarter that resulted in output not being able to increase from the prior quarter?
Well, we're satisfied that to get to 900,000 ounces and maintain it as against the previous quarter was a very good result. And I think most of our operations are doing well. Of course, we can always do better. We could have done a lot better, I suppose, at South Deep had we not had a 10-day strike. We lost probably around about 10,000 ounces or so. So we could have actually increased relative to the previous quarter. But overall, I think it's a satisfactory performance, and we'll continue, obviously, to improve efficiencies and productivities where we can.
What's your outlook for the next quarter in terms of production?
Well, I think next quarter is difficult to say because it's the Christmas break that we've had in the March quarter, which impacts January month. What I'd rather say is, instead of giving you a quarter forecast for the year, we expect to be between 3.5 and 3.7 million ounces. That's more or less what you look at for this calendar year now, 2011. And I think that's the resolution one should look at when assessing how our performance is going to be this year.
Yeah, let's talk about those cash costs. I mean, we did see a year of price increase in South Africa. We had increases for electricity, as we all know. We also have, of course, now oil prices increasing again. On your cash cost side, could there be more that could have been done to squeeze those margins even further?
We've done a great deal this year. In fact, we started a process of re-engineering our businesses across the group, and that was an initiative we kicked off in March, April. It's already delivered significant results. In South Africa, for example, over the last 6 months, we've reduced our costs by about 170 million rand already, and there's a lot more I'm sure that we can do this year. If you look at this quarter in particular, costs in South Africa were down, costs in all of the other jurisdictions were down or flat in their home currencies. So it's been a very, very good performance for us. There's obviously more we can do, but the margin has gone from 18% last quarter to 20% after all capital expenditure. So it shows that we are stretching the operations on the cost side, the efficiency side, and making sure that we're going to benefit from the gold price.
Yeah, but of course an important question for investors is, can you keep it at those levels, 20% now?
Oh, we'd like to increase it. Over time.
What's the target?
Well, we'd like to get up to something around 25% margin, but that's going to take some time.
Yeah.
It's going to take more efficiencies to kick in. So let's see. A year ago, I said 20% is our target. Some people said you won't get there. We've now achieved it this quarter. Now we need to consolidate on that and see if we can improve further over the next year or two.
That's over the next 2 years?
Yes.
Okay. Let's move on to the growth pipeline. I guess investors want to know if indeed you found the new El Dorado, if you like. Are there any promising growth prospects out there? You speak of work that you're doing in the Philippines and Peru as well as Mali.
Well, the Philippines is very, very exciting. We've got a 60% option in a project called Far Southeast. That is one of the highest grade copper gold porphyries around. And in terms of size, it's not too shabby either. This is going to be somewhere between 200 and 400 million tons. And there's not too many of them around. So that, I think, can be a game changer for Goldfields. We're going to be doing a lot of drilling over the next year. We're going to start a feasibility study. And I believe that by the middle of the year, we should be able to give you a better feel as to how we see this thing. But this has the potential to be a 1 to 1.5 million equivalent ounce producer per annum. And that's a game changer for Goldfields. So very exciting. A country, of course, that's changing. Chuquisaca in Peru is another project that continues to show more upside, continues to grow. and we're in feasibility already, doing another drilling campaign. And again, I think we can make a decision on that to construct within the next 18 to 24 months.
Yeah. Is Africa's time over in terms of finding a new big deposit?
Well, South Deep is still the world's premier ore body that we're building. And remember, we're still only producing at about 275,000 ounces a year. That's going to be going up to at least 750,000 ounces by the end of 2015. $1 billion of capital expenditure was committed. We've spent about 20% of that so far. So I do believe that is also a game changer for not only the company but also the country in terms of the gold sector.
Yeah. With all this work that you're doing, I suppose we can't be talking to you about big deals and big takeovers. We haven't seen any in the gold industry for quite a while now.
Yeah, I think big takeovers are very tough to do at these sort of gold prices.
What is the problem? Yeah.
Gold prices mean that valuations are inflated, and gold companies often trade above net asset value. So it means if you buy them, you have to pay more than what you actually see as the fundamental value. And I think that for us is not the kind of game we want to play. Other players may get to that, but you know, we have almost 80 million ounces of reserves, second largest in the world. We've got a tremendous organic growth pipeline, greenfields growth pipeline. We don't need to do it. We're discovering ounces at $10 an ounce. We don't need to buy them at $1,000 an ounce.
Yeah. But what's your sense of the perception that it's becoming increasingly risky for companies to operate in South Africa, given all the debate around nationalization, the issues around cost increases, the issues around labor? Well,
I would say to you, you know, we operate around the world, and a lot of the issues that we're dealing with in South Africa are common to those areas. You know, power costs are going to be going up all over the world. What are the three key areas of scarcity you're going to see? Energy, water, and food. And then in the mining industry, skills. So a lot of the same issues that we face in South Africa are global issues. Nationalisation, I don't believe it's a key issue that government is going to be pushing. And frankly, the mineral assets already vest in the state. We don't own them anymore, we lease them. So they already own the assets.
Finally, the gold price forecast. What's your number?
I don't give a number, but what I do say to you is that there's a lot of good things underpinning the gold price. And for me, what's been pivotal to the latest round of thinking is that demand for jewelry in India is now growing in tons again. Previously, the dollars invested into jewelry in India grew, but the tonnage was declining. We've now seen that turn. So tonnage in India, tonnage in China is now growing, and I think that's a very important underpin for the gold price. So I would say more factors are positive for the gold price than are negative.
Would you say you can see it below $1,000 an ounce, or are you one of those who see it above 1,500?
Yeah, I think 1,000. I don't see it going below 1,000. I'd be surprised if we went below that. So I think there's certainly a good underpin at that level, and who knows, it could go higher.